want to thank everyone for joining us. I'm Rob Emmett. I'm a video director and editor and the owner of a video production company called Win-Win Productions. And today I'm producing and facilitating this webinar with some colleagues whom I'll introduce in a moment. These panelists are specialists in different areas of business, and they're going to unpack some ideas that we think are important for business people like yourselves to know. How do we set ourselves up for success in business in the middle of a global pandemic and economic shutdowns? That's been the overall theme of the webinars we've created the past week. We created one on cash flows and another about recreating a successful workplace culture last week. And today's concerns what succession planning looks like in a COVID-19 economy and how businesses have adapted. We'll have a brief introduction about this topic from our featured panelist, Andrew Bell, and then the three panelists will discuss it. Now, we're not taking live questions in these webinars. However, I will pass on your questions to the panelists and they'll get back to you by email. So when you ask a question to a specific panelist, please be sure to include their name in your question so I can send it to them when the webinar is over. To type in questions, just open up the Q&A panel using the Q&A icon in your Zoom menu. And you'll also be able to like and comment on other viewers' questions there as well. So right now, I'd like to introduce our panelists. And first of all, Jennifer Denil. Jennifer is the owner of JD Financial Associates. She is a certified public accountant who provides fractional financial controller services to closely held businesses. Jennifer assists her clients with understanding cash flows, increasing profitability, and identifying cost savings from operational efficiencies. Her clients benefit from her 30 years of financial experience without the cost commitment of a full-time employee. Most recently, she has assisted many companies of varying sizes with navigating the CARES Act funding opportunities. Next is Mary Erlain. Mary Erlain is the founder of Peak Development Strategies, and she believes an organization's foundation is their people, the employees, the management, and the owners. She is a published author of business books, and her most recent books address the opportunities and challenges of the multi-generational workforce. Generational diversity is a root cause of many of the problems in business today that affect growth, productivity, and profitability. Mary says, as the constraints of doing business ease due to the pandemic, don't forget your people. She believes that a culture needs to be rebuilt in order for a business to sustain itself going forward. Lastly, our featured panelist today is Andrew Bell. Andrew is a tax, estate planning, and transactional attorney with Schoenberg, Finkel, Newman, and Rosenberg, LLC in Chicago. He assists closely held business clients with their succession planning, provides tax analysis as part of the firm's transactional practice, prepares estate and gift tax returns, and maintains a sophisticated corporate practice. Andrew received his JD from Loyola University, Chicago School of Law, and after graduation, Andrew returned to Loyola to earn his Master's of Law in Tax. Now, today's topic is Plan for a Different Future. And we're going to start with a brief overview of the topic from Andrew, and then we'll open it up for the whole panel to discuss, and I'll wrap it up in about half an hour. So let's begin. Andrew, I'm going to toss it to you to give us an overview. And what has changed in succession planning, and how are businesses responding at this point?
So first, I want to thank Rob and Win-Win Productions for this whole trio of webinars. Rob's been fantastic. I can't say enough, helping all three of us through this new area of tech, and I think this new world we're in of video conferencing and webinars and all that. And we'll get to that. We'll get to technology, I think, in the second part of the talk. So as Rob said, I am a trust and estates, tax, and corporate attorney. Loosely, that translates to I help start businesses, I help grow businesses, and then I help transition businesses. And really what the focus of today is going to be the impact of COVID on the succession plans for closely held businesses, and then also how those closely held businesses maybe, because now may not be the time to transition your business, how they're either getting back on their feet or weathering this viral storm. So really two topics, the first being succession planning. What does that mean? At some point in time, business owners they're not going to work anymore. Their large asset's going to be their company, and there's really three ways you see people get out of their business. The first is going to be to sell to an outside third party, in a third party arm's length transaction. The second is going to be a transfer to a current equity owner, a shareholder, another member. Oftentimes that occurs at retirement, death, or disability. And then the third would be passing the business on to the next generation. And that can be done either at death, but the topic today is actually going to be transferring it to the next generation during life using gift tax strategies and in what is right now probably the most favorable gifting environment that we've seen in a generation. The second part of the talk is really going to be if you're looking to get out of your business, but buckets 1, 2, or 3 aren't going to work for a variety of reasons, what are you doing to keep things afloat, to weather the storm, to get back to a point where you feel you're safe to pass things on. So first, we're gonna just kind of touch on the three topics of succession planning, the 3 methods. First, right now, the selling your business to a third party. With some exceptions, most industries, most valuations are down. You're probably not going to get the best value for your business right now. Now's not a great time to sell. However, if you're looking to acquire a new line of business from a competitor, perhaps someone that wasn't as liquid as you during this time period, you might be able to strike a pretty good deal now. So that's something to consider. The second one is going to be transitioning to a current shareholder, someone or an equity holder, depending on what kind of business you have. And those buy-sell agreements usually kick in, again, disability, death, and we're really focusing on the death aspect. What happens when you pass away, you had 50% of your business, your family has no interest in the business, and you have this agreement that your partner's got to buy you out about your family members, I should say, in a certain number of years. You should probably now check your books, see if you have enough cash on hand that your partner can buy you out, or often these agreements are funded with life insurance. The business or the shareholders take out policies on each other, or the business takes out a policy on the shareholder or equity holder, and then that funds the buyout. An alternative there is going to be a promissory note where the consideration for the buyout comes in the form of a note from either the other shareholder or the company itself to pay out the family members over a number of years. Now is a great time to look at the note, make sure the interest rate reflects the current low interest rate environment, and also that the term makes sense for your business. If cash flow is an issue and you're worried about the business being able to pay out your family over, it's usually a 3 or 5 year term, maybe now is the time to go back to your partner and say, hey, maybe we should build in some flexibility here, make it a 10-year term, 15, 8, work with your accountant and with your attorney on that front. So right now, selling your business, that might be a little difficult. The buy-sell agreements, that's something that usually kicks in at death. So what do you do though if you have a family member or the next generation? It could be a well-regarded employee. You want to transfer the business to them. They may not have the cash. You want to make a gift. You want your customers to be taken care of, your client base to be taken care of, but Mr. or Ms. Employee doesn't quite have the cash to float it. You could certainly let them buy it over time, or you can make a gift. And gifts of closely held business interests are really at the heart of succession planning and estate tax planning in our practice. The reason being the government gives you the opportunity to take a discount on the straight book value of your company if you're closely held, because there's not a ready market to, you're not, Joe's Hardware isn't up on the New York Stock Exchange, so to speak. What really makes today's environment ideal for gifting parts of the interest are the same reason why selling your business might be difficult. The value is depreciated. So already you're starting with a lower value perhaps than you would have a year ago. Furthermore, if you can sell your assets to a trust and then take back a note, so you're essentially selling to a trust that at the end of the trust term, that goes to the next generation, you're required to take back your principal that you put in plus some interest. It's called an intentionally defective grant or trust. And their interest rates are dictated by the IRS, and right now they are absolutely at the lowest rate they've been, as far as I can tell, the last 20 years, as far back as I went. So you have a chance to really leverage that now. And finally, as you probably know if you're watching this, or you may not, you can give away $11.58 million this year to anyone you want, okay, and not pay a dime of gift tax. Every dollar you give away that reduces the amount of estate tax you can give, amount of your taxable estate you can give away at death. But that 11.58 million is the highest it's been in really forever, and it's set to sunset in 2026. But we might have a new regime come in the White House here come in November, and keeping politics out of it, usually a Democrat in the White House or in control of Congress means lower estate tax limits. They might, you might see that drop from 11.58 to 5 million to 3.5. We don't know. So right now you have a combination of really low interest rates, a very high gift tax exemption, and already depreciated values of your business. So if you have confident that your business can succeed with new ownership, that, a family member that you care about, now is, I think, the time to really consider gifting a chunk of your equity to that next generation. So that's on the succession planning side. And then the other question is, what if you're not quite ready to give up control? Things are tough, times are tough. You really want to get things back on track before you pass it on. That's really where technology and this webinar, instead of being at a Hilton hotel ballroom, is taking place in cyberspace. It kind of underscores the real opportunity that COVID's presented to business owners, and what that is it's forcing at least my clients, it's forcing them along the learning curve in terms of use of technology, not just with their customers, but within their employee base and in their organizational structure. Professional services companies, law firms, accounting firms, we're sometimes behind the times in technology. We're the ones keeping the fax industry in business, so to speak. But this has afforded that segment, especially, an opportunity to see what their employees can do working remotely, perhaps shifting their fixed costs away from fixed office space, maybe into technology, the mobility it gives them, the flexibility it gives them, and then the fact that you can really provide substantially the same services you could in person remotely. Now, not all industries can do that, but I think that this is forcing everyone to explore what their opportunities are in that space. So whether it's, hey, you need to have your employees check in every hour to make sure they're actually at their computer, or giving a webinar to all of you. If you have your cloud-based services, if you were looking for, you were thinking about going paperless, I mean, now's the time to do so. And I really think that those industries that have taken the opportunity, have looked at this as an opportunity, and those companies that are willing to make a shift towards a technology-based approach to their industry, are really going to be the ones that come out of this. And we will come out of this, right? They're going to be the ones that are going to be set up for decades to come. So that's really an overview, and I'm going to kick it to Mary or Jen for questions.
I have a couple quick questions. Going back to the first part of your talk, and the buy-sell agreement that you were referencing, do you see, when you structure a buy-sell agreement, do you build in a specific formula of how the business would be valued at that point in time? Should that some event happen that agreement gets triggered, like if you have two owners and one of them becomes incapacitated for some reason?
Yeah, it's absolutely a case-by-case basis. Okay. It depends on what the business is. Maybe if something really is invested in passive real estate, it's a multiplier of rent or fair market value of the underlying assets. You know, depending if it's because of disability or if it's because of death, there might be a different valuation. We've certainly had cases where we've had the business valued every year, and the buyout changes every year based on that certified valuation of the business. It depends on how sophisticated and how up to date you feel. I've had others that have just said, you know what, we're going to get a life insurance policy of X, and at death, the other owner gets whatever the life insurance policy is, whatever the business is. I mean, that's kind of a quote unquote street level way of doing it. I mean, you have the flexibility. There's no requirement necessarily that you use a specific valuation mechanism. Certainly, if you're going to do gifting, you will need to have a third-party certified business appraiser appraise those interests for gift tax purposes. The IRS is very strict about what they will accept in terms of fair market value. That is actually a term of art from the IRS that needs to be respected. But when you're buying out if you're structuring a buyout, you have flexibility.
Okay.
Now, if you're structuring a buyout in case of death and you get $500,000 of life insurance, that might be different than what you report on a state tax return. Even though you got the money, that could be a little complex. I won't get into won't get too far into the weeds on that one, otherwise everyone will fall asleep. But it's certainly something we explore. And certainly when you have, I mean, the whole idea, I keep using the term closely held business, meaning it's not marketable when there isn't a market out there. You know, one of the disadvantages is you don't have a set share price, right? And one of the advantages is you have flexibility in trying to figure out what your business is really worth.
You mentioned, I think you said gifting to a trust, and I'm wondering, in a situation where the owner is looking to transition the business to the next generation, but still keep control, is there a specific way that could be handled so that the older generation still has the ability to manage the business whilst grooming the younger generation, and the younger generation essentially has the stock of the business?
Right. So really, it's not I don't mean to conflate techniques. So it's actually a sale to the trust, and then you take back a note. So that point so that's a little different. You can also gift shares in trust, and then have the shares voted by whomever the trustee is, and that's just a straight gift. So you took this, so that this is more taking it out of the tax realm and into the practical. So what if you want to see essentially your succession plan in action? Okay, so maybe the equity, most of the equity is given up. Maybe you retain a certain number of voting shares. Maybe you give some of it away, not all of it. There's no requirement that you give it away all at once. Or, you know, let's say you're an LLC, and you're a manager-managed LLC. Maybe you structure the operating agreement before you transfer the interest that, you know, you're going to be the manager until you die, and you have to consent to being removed. Now, you know, that might bring up some issues as to whether or not you gave up control over the assets, and that's a separate issue that you need to discuss, and you'd need an attorney to research whether or not you've really given up control over the assets for gift tax purposes. But from a business perspective, and from a client security perspective, those relationships, a lot of our clients, their business is built on their name, their personal name, and their relationships, and there's no guarantee when they're not there. When you're not there, that those clients will stay. And so you'll see people want to hang on for no other reason other than, hey, this is my relationship. I have to make sure the next generation can continue this, and that they want to. So on that line, you can tell people, hey, yeah, Junior is coming in, but I'm still going to have voting control over X, Y, or Z, or, you know, it's going to be over a number of years. And one of the common strategies we've used is is gifting smaller interests in the company to the generation, bit at a time. So you can give away $15,000 to anyone without eating into that 11.58 million. And so you take those small, tenths of percents or, 0.08% interests, and you give it to, a variety of people. You can give them a taste for the business before you make a bigger gift. Really what I was trying to underscore now is that the environment is so inviting to make large gifts. The tax advantages are such that, you don't want to ruin the business just to take advantage of a good tax environment. But if this is something you were mulling over already now, and these interest rates change every month, so the sooner the better. When the economy picks up, they'll probably pick back up pretty rapidly. So this is more of it's kind of a very specific opportunity that's afforded. But certainly, yeah, there's no requirement you give away everything at once.
So with the current circumstances causing people to want to leave business because they've been affected by this current situation, typically what we encourage, and I know all of us collectively on the call, is we encourage a significant period of time to create a succession plan. But sounds like these succession plans in some cases might be created more out of a firestorm. So how do you navigate if somebody wants to sell their business, and how they ultimately transition so this isn't such an overwhelming event for the people in their business?
So that's a good question, and I keep saying it's a case-by-case basis. Every business is different. How much you want to share with your employees? I've had everything from the CEO keeping people updated. Leave our office, go make an announcement. Hey, this is what's going to happen if I'm gone. To people that don't know that the business is being sold till the day before. And it really depends on what your relationship is with your employees. Now, in terms of the succession planning, would you call it a firestorm? Is that right?
Fire sale?
Fire sale? Yeah,
well,
actually, that might be more accurate.
Well, you certainly want to avoid a fire sale, and I think that's where I kind of got on the technology kick, because you don't want to be in a position where you feel that you have to sell. I mean, that's just standard business advice. You're not going to get full value for your business, and so if you can utilize technology, and really what that is the ability to work remotely, because that's what we're all faced with, right? You can weather that storm, and you're not in a position where you're pressured. And I'm kind of talking out of both sides of my mouth, because on the other side of it, it's, hey, if you're eyeing a competitor and they weren't set up, this is a great time to maybe make an offer where they're feeling pressure. So, I mean, we've certainly been on both sides of the equation, and that's just kind of the role of a business attorney. So succession planning should actually be thought of, I'll tell you, when you start your business. If you are a sole proprietorship or something like that, maybe that's not something you're concerned with. You're either going to sell, or your business is probably going to pass away when you do, or you're just going to give it to someone. But as soon as you have a partner, there's two people in a business. From day one, when things aren't high pressure, you should sit down and decide. That's when Jennifer, you talked about the buy-sell agreements. That's when you negotiate a buy-sell, really. Now, what I was talking about is you should already have one in place. Now you should come back and look at it and see, hey, wait a second, all things considered, in our promissory note, do we have a force majeure clause? Would this apply in COVID's case? But certainly the time to think, it's kind of funny, the time to think of the end is the beginning. And because there isn't any pressure. Same reason you do your powers of attorney for your medical power of attorney when you're healthy and well, when you can consider your options, hopefully not on your deathbed. I think the big part about succession planning is the planning part. It's not really meant to be a triage area. We're really trying to take the emotional aspect out of it, look at it logically, so that when things hit the fan, as they have recently, minimal tweaks are needed plans already in place. And you can focus a lot more on running your business than worrying about a what if.
So a follow-up to that, when you're talking about technology, companies that, I realize valuations are down, but companies that can prove out that they've been able to navigate this shelter in place through technology and do have the technologies in place to continue if that was the case, do they have leverage over other companies that perhaps are their competition?
Yeah, and so that goes to the, now's maybe not a great time to sell your business, but it is a good time to position your business to come out of this looking even more attractive than, rather than just a, 3x EBITDA multiplier. Maybe you get a higher multiple because you already have a technology-enabled workforce. When someone's, especially in the professional services industry, or if you're in tech services, I mean, hopefully they're up on the forefront of this anyways. But an acquisitive a company that's going to acquire another company that has a workforce that's expected to come along to service the existing book of business, one that's already been proven to survive COVID and maybe even thrive through it. Yeah, I mean, I can't tell you what you'll get out of it exactly, because I'm not a business valuation professional. But that certainly is a key way to make your business more attractive. And on top of it, even if you don't get someone to necessarily, bite if you're looking to sell, you're more successful. You're more profitable in the short term, because you've already become more efficient. Obviously efficiency drives profit. And this is a chance when kind of everyone is under the weather to come out better than what you went in.
Succession planning, and it's making me think of, Mary, kind of what you do with the different generations and transitioning operations from one generation to the next, and that process of grooming the younger generation to be able to step up and run the business as a leader. Is that something that you've gotten involved with on your end, Mary?
Yes. And I've always, usually a succession planning team I hear is the banker, the business broker, the CPA, and the attorney. But the business coach needs to be in there to help build that bridge. So I'm kind of that bridge builder in generations, but building that bridge in the staff between one company and another, or helping that individual who perhaps is a family member, a younger family member, ascend into the position as the leader of the organization. That as much as the financial piece needs that detailed focus, the people do too. So I guess in the succession planning world, don't forget your people either, because if they all leave, it just, the ripple effect can take place.
Well, that's Mary, that's a good point. I think if you want to shift them more to the generational discussion here, being of the quote unquote younger generation, where we're more employee than owner right now. I know a lot of my peers are taking a look at how their employers are weathering the storm, what sacrifices they've made or what they haven't made, what they've asked their employees to do or not do. And though right now isn't a good environment, maybe to shift, I think you may see coming out of this a lot of movement in that trained workforce space. Companies that have shown loyalty to their employees and a willingness to put the employee first. I think you're really going to see that rewarded with loyalty, with hard work, with better productivity. On the flip side, people that are perhaps more loyal to a bottom line, short-term bottom line, you may see people flee for opportunities. And I know that the marketplace is going to be full of talent in the near future, of people that, businesses didn't look at it from a long-term perspective, and you're going to lose that human capital. And that goes back to, getting your business in the best place possible. And that includes having the best people, especially in those industries like ours, like many that we represent and work with, where relationships are everything. You may have a key employee with some very key client relationships, and they're going to have an eye on how you weathered this hard time. So, and on that note, just to tell you, if you do need to make cuts, and certainly people do understand that, check in with your professionals, especially your attorneys, as to the reason that you are letting people go. I am not an employment law expert. My firm has several. You should contact them or whomever you work with before you make any personnel decisions. And same thing we talked about with the cash flow issue. Again, getting through the storm, consult with your professionals before you enter negotiations. You don't want to make an offer that you thought was just a conversation that was then accepted. Now you're bound to a deal, and you got litigation off of that. Now is the time. Now's not the time to be penny wise and pound foolish. This is the time to really lean on the people that are your advisors and your business partners outside of the actual equity context. That's what we are all really here for. And it's you figure you get through it together.
So, and I think probably all three of us have seen situations where clients have not reached out to us for that initial decision that they're making, and we come in at the end of a year in my case, or after something's already taken place and signed, and there's massive amounts of work to get something cleaned up and aligned with what was originally intended. Significantly more costs than had they just engaged us from the get-go. Yeah.
Additionally, we have talent. We have a lot of talent out there on the street, and it is my thought that talent will also be measuring what company they join by how did they weather the storm,
Right.
what kind of technology they have to use. So I do targeted recruiting, and one of our questions at the end is, what questions do you have for us? And I would anticipate a lot of measurement of which company I want to join based on this current situation and what did they do to sustain themselves.
Yeah. Absolutely. Yeah, absolutely. And it's not just, I should say, it's not just the my generation, the mid-30s, early 40s group, but also the people that are just getting out of school in a very tough labor market, but certainly intelligent individuals, qualified individuals. When they're making their selection, I think they're going to be very cautious and really pay more attention to more than just the bottom line of starting salary, bonus, et cetera. I think workplace culture is becoming more and more important. I think it's very important to the younger generation. It's not just what ends up in my bank account, but do I enjoy going to work? Do I feel like the workplace has my back, for lack of a better term, especially in the greater Chicago market. We are a private equity, small business hotbed, startup, and things like that matter. And I think the more we can impress upon our clients and our compatriots that it's more, pay attention to the bottom line, but don't forget your people, keep an eye out towards the future, and understand that we're all in the same boat, and we're all going to try and get through it together. And I think the people that row steadily instead of kind of paddle frantically are going to be the ones that come out of that reach shore first. So,
Andrew,
I'm feeling poetic.
I have one final question, and I'll wrap it up here. Just one question off the top of my head. Do you think this current situation will it increase the desire of people your age to become business owners, or will it decrease? Will they just want to stay employees and just not deal with the business ownership thing at all going forward? What impact do you think it will have on the younger workers?
That's a good question. And the question, and that it depends on who you're working for. I think probably 10 years ago, everyone wanted equity. The option, get the stock options, or some sort of equity incentive. And then with student debt, not to go too far afield, but I know with student debt being what it is, there's been a shift more to, I need a steady paycheck. How am I going to pay a mortgage? Who cares if the company takes off? I'd rather, bird in the hand or two in the bush. I don't think long term it's going to cause too much of an issue. I think short term, I think the access to capital to start a new business is going to be depressed because of just because of how the economy is. Interest rates are going to be relatively low, but who's going to have the collateral to put up, or if you're 25, even if you have a bright idea, maybe you want to save away for a couple of years, and wait for the environment to be better before launching something new. Obviously, now's not the time to go start your own pizza restaurant. Probably not. So, but I think long term, people that want to be entrepreneurs be entrepreneurs. People that want to work will work. I think COVID will shift the way we do business. I don't think that it's going to fundamentally shift who we are. And so I don't think that that's going to cause a long-term change.
Okay. Good. Well, thanks for that. And we have come to the end of our time today, so I got to stop us here. I want to thank all of our panelists, all of our attendees for joining us. And we have had now 3 webinars this series so far after the pandemic panic. The first was on cash flows and best practices in an economic shutdown. That was last week. Also last week, the second webinar was about recreating your company culture as your people work from home, which may be a permanent shift for some. And then today is on succession planning for businesses and how companies are responding to economic conditions. If you'd like to view a recording of one of these webinars, just email me using the email address that you'll receive in the follow-up email that I'll send out tomorrow. And lastly, if you have questions about creating video content during the shutdown to keep in touch with clients, creating video to promote your business on social media, or if you just like help facilitating webinars like this one, please contact me if you'd like to talk more. I'd be happy to explore that with you. Also, take a look at my website through the link in the follow-up email that I'll send. I'm Rob Emmett with Win-Win Productions. Thanks for joining us today. We hope you're well and able to work through these interesting times. Feel free to follow up with questions for our panelists too. They'll be happy to talk further with you. So have a good day, everyone. Thanks.